Hello and welcome to Business 360. I'm Parikshit Luthra and here are the headlines we are tracking this evening. Competition regulator approves the merger between Reliance Industries and Disney India's media assets. The $8.5 billion deal has been cleared, subject to some voluntary modifications. Nifty ends flat after hitting a record high in early trade. Nifty crosses 25,100 for the first time in intraday trade and marks a record close for the 10th straight session. SEBI warns investors over the SME IPO platform on stock exchanges, asks investors to be careful and watchful and not rely on unverified social media posts and tips. In a bid to curb front-running, Mutual Fund Association steps up surveillance. Sources say new rules demand weekly alerts on suspicious trades and a mandatory review of personal trades by key employees at asset management companies, among others. Union Cabinet approves creation of 12 industrial parks across 9 states with an estimated investment outlay of over 28,600 crore rupees. Also clears 3 new railway infra projects. India's two-wheeler makers promise to mass-produce at least one flex-fuel vehicle. To Union Minister Nitin Gadkari, sources say industry has also sought policy enablers for large-scale adoption of vehicles which can run on petrol with higher blends of ethanol over 85%. The GST Council will discuss rate rationalization at a meeting of the 9th of September, but no decision is likely. Sources say concerns surrounding the tax notice to Infosys is also likely to be addressed. Adani Power seeks a solution, claiming mounting dues from Bangladesh. Company sources say lenders and coal and component suppliers need upfront payments. Adani accounts for up to 10% of Bangladesh's power demand. Even as the war in Gaza rages on, Israeli forces kill 9 Palestinians in West Bank after large-scale raids involving hundreds of troops and air attacks. A journalist and sister are among 17 people killed after an Israeli airstrike in central Gaza. A drone attack by Ukraine sparks a fire at an oil depot inside Russia. No casualties reported so far. Russia deploys 30,000 soldiers to the Kursk region, where Ukraine claims to have captured 100 settlements and 600 Russian soldiers. West Bengal BJP leaders and workers clash with police personnel in several places during a 12-hour bandh called by the party. BJP alleges that the bandh is in response to police atrocities during a peaceful march to the state secretariat yesterday. Transport and rail services disrupted across the state. Chief Minister Mamata Banerjee accuses the BJP of conspiring against the state. The big story of the day, the Competition Commission of India has approved the $8.5 billion merger between Reliance Industries and Disney's India business, subject to certain voluntary modifications. The CCI announcement ahead of Reliance's AGM is a step ahead in creating the merger, and this will create India's largest media behemoth, spanning across 100 channels and 2 digital streaming platforms. Ashwat Kumar spoke to a set of experts to understand the impact of the proposed joint venture. Let's listen in.
I feel it's a very, very significant development. First of all, it would lead to India's largest entertainment conglomerate, which would be roughly 70,000 crores, above $8.5 billion. And there would be roughly 558 million viewership, which is one of the most large base anywhere in the world. But I don't have fuller details yet. I'm told that there are several voluntary modifications which the parties have pledged to the CCI, which, as I wrote in one of my pieces a couple of days ago in Economic Times, this would lead to an expeditious approval, because CCI's concern would only be, in my view, that there would be a dominant mega merged entity, a behemoth, and this could lead to, in the cricket space in particular, there would be a dominant undertaking. This would lead to, in the pricing, for instance, there would be unilateral rates and so on. So there could be various modifications like capping advertising rates during cricket matches for a defined period, or licensing high-value cricket content to competitors on a non-exclusive basis, or divesting overlapping assets in related markets, and committing to a greater transparency in pricing, content and contract terms, and so on. But in any case, whatever the parties have committed to the CCI would have led to CCI's conclusion in the matter that there would be no significant, or there would be no appreciable adverse impact on competition in the market.
Mr. Diwan, again, $9.5 billion chasing those cricketing rights. Do you see them yielding results, especially in light of what Mr. Kumar just pointed out, that the companies are likely to have made various concessions to seek the CCI nod? Is that something that would be weighing on your mind?
So we'll, of course, as I said earlier, wait for the details, Ashmit, to get the granularity on making an assessment of the impact. But as I said, the JV will also clip some costs in a lot of properties, in a lot of the broadcast. The expenditure that's involved in terms of selling these or reselling these to buyers is something which they can definitely have much more leeway in now that they're not kind of wanting to. They don't need to kind of be looking over their shoulder, or each of their shoulders, to figure out what the competition is doing. That's one. Second is, you will have multiple streams that will keep getting generated, tangentially from these cricketing rights. So the money that has been put to acquire these rights may have a little bit of a longer payback period, slightly, but incrementally, but may not upset the revenue model very dramatically.
What does the road ahead look like in terms of regulatory approvals before we actually finalize the merger?
Yeah, I think the most important thing relates to the market. And if there are areas and covenants where they have had an understanding and they know what they have to do, I think the critical piece is how do they move this forward with a very strong governance and accountability system. In other words, the way these two parties come together and design their clear roles and assign them to the right people along with the right tools will actually build their synergy in terms of capability and reputation, and will create a very compelling narrative for investors. And I think that is the way forward from where we are.
All right, so that is the big deal and big news break here on CNBC TV 18. The Competition Commission of India clearing the way for the Disney Reliance Industries deal. Moving on, RBI Governor Shaktikanta Das is addressing the Global FinTech Fest. Let's cut across live to it.
All of us strive to enhance financial inclusion, optimize digital payments, and harness emerging technologies like blockchain and artificial intelligence. We also confront the inherent unpredictability and interconnectedness of the global financial system. In this environment, developing a mindset that anticipates disruption and embraces change with prudence becomes very, very important. Financial institutions and fintech startups alike must therefore adapt swiftly, leveraging agile strategies and robust frameworks to capitalize the new opportunities while mitigating the connected risks. It's up to the stakeholders in the Indian financial ecosystem, banks, non-banks, fintechs, regulators, and the government to foster innovation with resilience. While the fintech ecosystem is ushering in much needed personalization and contextualization of finance for consumers, the context needs to be broadened to build a financial system that serves the broader society. To achieve these, I wish to propose the following 5 policy priorities for the future of India's financial system. The first policy priority would be digital financial inclusion. As a policy priority, Financial inclusion should ensure that everyone has appropriate access to financial services. The Reserve Bank's Financial Inclusion Index, which we launched in 2021 and which measured 53.9 in March 2021, has gone up to 64.2 in March 2024. So from 53.9 in 2021 March, it has gone up to 64.2 to this year's, that is March 2024. As a country, we have succeeded in ensuring banking access to every village within a 5-kilometer radius or a hamlet of 500 households in hilly areas. So far, 530 million Jan Dhan accounts have been opened under a national mission. And incidentally, as I am speaking to you, the Jan Dhan scheme of the government has completed 10 years since its establishment, and its progress is there before all of us to see. Initially, the apprehension was that all these accounts will be zero balance accounts and there will be no activity, there will be no sort of transactions taking place through such financial accounts. But I think the experience over the last 10 years has completely belied such apprehensions, and today there are 530 million Jan Dhan accounts, most of it, in the name of women, and many of it in the name of women, and the total savings bank savings in these accounts, I don't recollect the number, but it is a huge amount. And I have to also mention that of the Jan Dhan accounts, 66% of the accounts have been opened in rural and semi-urban areas, and 55% with women beneficiaries. While significant strides have been made in expanding financial inclusion, the evolving landscape demands a shift towards digital financial inclusion. That is, promoting secure and digitally enabled financial services and products for the financially excluded and underserved population. Digital financial inclusion has the unique advantages of scalability and cost effectiveness. Accordingly, the next 2 decades will predominantly be about leveraging technology to deliver accessible and tailored financial services that meet diverse needs. In the pursuit of digital financial inclusion, fintechs may strive to offer innovative and accessible financial services, bridging gaps in traditional banking with digital payment solutions, microloans, and affordable insurance. They can enable seamless access to financial services in remote areas through mobile banking apps, digital wallets, and online lending platforms with superior and safe customer experience. The use of data analytics and AI could further enable personalized and efficient financial solutions. I would now like to highlight and speak on priority 2. I said that there are 5 priorities I would like to highlight. Priority 1 was digital financial inclusion. Priority 2 is digital public infrastructure, or DPI. The second key policy priority would be to further deepen digital public infrastructure. DPI, which encompasses frameworks like digital identity, that is Aadhaar, universal fast retail payments, that is UPI, and targeted payment solutions like platform for bill payments, will enhance the efficacy of the financial system in general. They would be key tools to promote interoperability, transparency, and cost effectiveness. New DPIs could address emerging challenges such as frauds, cyber threats, data privacy, and other concerns. They could also support the integration of advanced technologies like blockchain and AI to enhance security and efficiency in financial services. Continuous innovation is crucial in harnessing technological advancements and maintaining a competitive edge in the global financial landscape. One significant initiative in this direction is the Reserve Bank's pilot on Unified Lending Interface, that is ULI, earlier known as the Public Tech Platform for Frictionless Credit. ULI aims to enable lending institutions to offer frictionless end-to-end digital credit by leveraging consent-based data and related services. There are about 50 such types of data services on the ULI platform. Apart from banks and NBFCs, we are now focusing on inclusion of other lenders like cooperative credit institutions through the NABARD. A full-scale launch of the ULI will be done in due course. As I said 2 days ago in another event in Bangalore, the new trinity of JAM, UPI, ULI will mark a revolutionary step forward in India's digital public infrastructure journey. Priority 3 that I wish to highlight is consumer protection and cyber security. Ensuring robust consumer protection is crucial for upholding trust in the financial system. As consumers are increasingly relying on digital financial services, their expectations for personalized, efficient, and seamless experience are also growing. Alongside traditional risks such as mis-selling and fraud, new manifestations of consumer risks such as data privacy and security breaches have emerged with the advent of new technologies. Leveraging technology for real-time monitoring and ensuring regulatory compliance will be essential to address these challenges effectively. The Digital Personal Data Protection Act 2023, that is DPDP Act 2023, is a cornerstone in India's consumer protection landscape. It marks a significant shift towards safeguarding personal data. This act enshrines the principles of data minimization and purpose limitation to ensure that organizations collect only necessary information and use it solely for specified purposes for the required period of time. It empowers individuals with the right to access, correct, and erase their data, thus giving consumers greater control over their personal information. This act incentivizes businesses to adopt robust data protection measures, which will ultimately enhance trust in the digital transactions. Dark patterns such as misleading buttons, hidden charges, and forced continuity have become big concerns in the digital marketplace. The Guidelines for Prevention and Regulation of Dark Patterns 2023, issued by Government of India, is an important step to protect consumers from unfair application of technology in businesses. These guidelines aim to identify, prohibit, and penalize restrictive and misleading practices so that consumers can make informed choices. On their part, banks and fintech NBFCs are expected to adopt a customer-centric approach, implement robust security measures, offer transparent financial products, and adopt fair lending practices.
All right, on that note, we take a short break here on CNBC TV 18, but don't go anywhere. News continues on the other side. Now to today's market action. Markets ended flat after hitting record highs in early trade. Nifty breached 25,100 for the first time in intraday trade and marked a record close for the 10th straight session. Sensex reclaimed 82,200 but failed to hold on to it. IT and pharma were the key drivers while banks and mid-caps underperformed. On to the crypto markets where Bitcoin prices have fallen below $60,000 after surging above $65,000 over the weekend. Other cryptocurrencies also followed suit, triggering a wave of liquidations in the crypto futures market. $85 billion worth of Bitcoin has been liquidated. The market has also $100 million in Ether liquidation. Most cryptocurrencies have turned negative for the month of August. However, Bitcoin is up 39% for the year, while Ether is 7% higher. The Union Cabinet has approved 12 new industrial smart cities across 9 states with an outlay of 28,602 crore rupees in order to boost domestic manufacturing. Addressing a cabinet briefing, Union Minister Ashwini Vaishnav added that the project is likely to attract over 1.5 lakh crore rupees and will generate 10 lakh jobs.
Combined इनमें इन्वेस्टमेंट सरकार की तरफ से आएगा 28,602 करोड़ का 28,602 करोड़ का और once these corridors and nodes are developed उसमें इन्वेस्टमेंट पोटेंशियल है 1.5 लाख करोड़ 1,52,757 करोड़ और करीब 10 लाख एम्प्लॉयमेंट का इसमें पोटेंशियल है.
CNBC TV18 exclusive now. India's two-wheeler makers have promised Union Minister Gadkari that they will mass produce at least one flex fuel vehicle. Sources have told CNBC TV18 that the industry has also sought policy enablers for large-scale adoption of vehicles which can run on petrol with higher blends of ethanol. MobiKwik co-founder Upasana Taku has said that the company is awaiting approval from SEBI for an IPO and have faced excessive regulatory scrutiny. Speaking to Ritu Singh, Upasana Taku said that companies who filed their IPO papers after MobiKwik have already gone public.
There are companies who have filed a few days, few months after us, and they're already public and they're doing well. So, we are also waiting with a bated breath on when we get our opportunity to come to the market. I think that several events earlier in the year led to the fact that there was a lot of scrutiny on our application from a regulatory scrutiny was there, excessive. And after we cleared that, then they started looking at all the other topics that they have to look in the DRHP application. And I think I'm under the impression that most of it is done.
With that, it's a wrap on this edition of Business.